Are you tired of getting burned by surprise news events or losing money on overnight gaps? Then this course is for you. I'm Stephen Cox, and in the next few minutes, I'm going to show you an easy to follow intraday Forex spread betting strategy that uses the Relative Strength Index RSI and strictly enforces two crucial risk rules. So let's get started. First things first, we got to let the trend be our friend. We've got to establish a medium or longer term trend first before we start looking at some of our short term trades. So, as an example, here you're looking at the euro dollar chart, and as you can see, we had a series of higher lows and higher highs that has ended. So, that long term uptrend is over and it's represented by the green line. Now you can see the euro dollar has gone into a medium term sideways trend ranging from 11,468 to 11,790. That's really important information. And finally, you can see within that medium term trend, there was a short term trend recently that was downwards or bearish. That's now over. We've broken out of that. So it's fair to say now that we're in a medium term sideways trend. And that's important information. We can trade this both in a bullish way or a bearish way. If, for example, the overall trend here on a longer term or medium term basis was bearish, we would avoid bullish trades and vice versa. So now we go and look at the short-term trend in greater detail. So we switch the chart here from a daily chart to a 15-minute chart. And you can see clearly here with the euro dollar, we're in a series of higher highs and higher lows on a short-term basis. So now we know on a medium-term basis, the trend is sideways, but in the short term, we've been trending upwards. But we're at the higher end of that trend now. So while there might be a small bit more to the upside, the likelihood is we're going to pull back in the short term. And this is where the relative strength index comes in. Again, this is a 14-period relative strength index, but it's on a 15-minute chart. And we're focusing on two key areas. One is we buy below when RSI is below 30, and the other one is we short when the RSI is above 70. It's as simple as that. And then when we enter either of those trades, we will close out when RSI gets back to 50. So as you can see from the chart here, the RSI at this moment in time is moving closer to 70 than it is to 30. So we're probably lining up to place a short trade on this, but only if RSI gets above 70. If we initiated that short trade, then we would immediately close it down when RSI gets back to 50. So our entry rules are for long trades, in other words, buy trades. When RSI gets below 30 and it's about to cross back up, we buy. And for short trades, we sell when RSI is above 70 and about to cross back down. And our exit rules are simple. It's when RSI returns to 50, whether you're long or short, you exit the trade. But it's really important to discuss stop losses as well. And if you're on a long trade, you would put your stop loss in just below the swing low, and for a short trade, just above the swing high. And finally, no more than 1 to 2% of your capital at risk. So, for example, if you've got a 10K account, you don't want to risk any more than €200, for example, on this specific trade. And your stop loss should reflect that. So, an example here on the chart of setting your stop loss if you're in a long situation. You can see here that the recent low was 11,622. So you might set your stop loss there at 11,620. And finally, here are two non-negotiable risk management rules. Really, really, really important. First of all, don't trade within an hour of major economic announcements. So for example, if you're trading the euro dollar and the ECB are about to make an announcement on interest rates, you're asking for trouble if you have any type of a trade on the euro dollar, because that's a significant announcement that could move the currency in either direction. You might get lucky and it goes in your favor, but if it goes against you, it can go against you in a big way. So please don't trade within an hour of major economic announcements. And you can find those announcements usually in any of your spread betting platforms. They'll have an economic calendar and you can see what's upcoming and when it's upcoming. So try and exit your trades within an hour if you have one on. And then finally, no overnight positions. Number one, because it's going to cost you money in financing. And second of all, there can be news overnight that you're not ready for. And if you don't have a guaranteed stop on, you could be asking for trouble. So remember, let the medium and longer term trend be your friend on a daily time frame chart. Then move to your 15-minute chart. And when RSI is below 30, you buy and close when it gets to 50. And then when RSI gets to 70, you sell and close when it gets to 50. And remember to strictly enforce the 1 hour news rule, and also do not leave trades on overnight. Now, I'd really like to know how you get on with this strategy, so please post in the comments below whether you've had a good experience or a bad experience. It's great learning for everybody. And finally, if you like the content in this video, please like, share and subscribe.